What's up, it's Ron. Let's talk about the MACD trading indicator. MACD is one of my favorite indicators because it helps me quickly see the strength and direction of a trend. It combines moving averages and momentum in one tool. When the MACD line crosses above or below the signal line, which I'll show you here in just a sec, it gives me a simple buy or sell signal. It works well on any time frame and is super easy to understand, especially for beginners. And since so many traders are using it, the signal often leads to real price moves. That's why I trust MACD. It gives me clear, powerful insights for better trading decisions. Quick disclaimer, this isn't financial advice, so always do your own research. And hey, if you appreciate insights like this, hit the like button. It really helps push this video to beginners trying to learn how to trade crypto, and it'll help you boy out, so it's super appreciated. Let's get into it. MACD stands for Moving Average Convergence Divergence. It's one of the most respected tools used by traders. This sounded confusing to me when I first started, but it's pretty simple. Convergence means the two moving averages are getting closer together, and divergence means the two moving averages are moving apart. MACD is built using moving averages, which if you haven't seen the first video on moving averages, make sure to watch that as well. Here you can see the MACD line, the signal line, and the circle where you can see where it crosses. And the red and green bars are the histogram, and that is simply the MACD line minus the signal line. So it's the difference. It shows how far the line are apart from each other, and when they become close together, then you'll see that the bars get smaller and it may switch trends. So if you notice, when these two lines come closer together, you'll see that this kind of looks a lot shorter, but when they move farther apart, you notice that the bars get larger. All right, so now that you know some of the basics, let's go ahead and jump into the chart. All right, now we're back in trading view. Here at the top, you want to select indicator. You want to type in MACD. Under technicals, select moving average convergence divergence. There we see it here at the bottom. Let's X out of that. Let's go ahead and jump into the settings. Hover over the MACD. Click this icon right here. It'll open up the settings. Now, I like to keep it default, but let's look at what is going on here. Let's click on inputs. Now, the MACD line is a 12 EMA and a 26 EMA. And then the signal line is a 9 EMA. Under style, here's the histogram. You can adjust these colors. You can change the bar color type, whatever you want, but I like keeping all the other settings the same. Remember, every other trader is likely using the same settings. That means we're all seeing the same signals, which makes those signals more reliable. If too many people are using different settings, then the signals get less meaningful. So sticking to the default helps me stay on the same page with the rest of the market. All right, let's go ahead and click OK. Right now we're on the BTC on the daily chart. Let's go ahead and click this daily chart. Let's first just click this vertical line. Let's find some areas where they cross like this. So I'm gonna put a vertical line there. Let's look for another one. Let's do this one right here. Okay. So here we see the MACD and the signal line crossing. We see large green bars on the histogram and it tapering off slowly and then becoming bearish. What do we notice that happens when this is occurring at this cross? We see that the market reacts and there's this pullback that becomes slightly bearish. It's not a very strong trend, as you can tell from the bars. So it kind of does this type of move for a little bit, but overall, the MACD did do what it was supposed to do, gave us the right signal. Now, it doesn't always do that, but we aren't only relying on MACD, right? We're looking at all the other indicators in the series. Let's look at this one as well. Not very strong bars either way, but it does cross right here. It does do this bullish move, and then it kind of crosses again. It does a bearish move, and then it crosses again here and does this really bullish move, and you can see how strong this trend is. Remember, when these two signal lines are getting closer together, it's converging. When they're moving apart, it's diverging. Let's look at a shorter time frame. Let's remove the drawings here. Let's reset the chart. All right, now let's take a look at a 15-minute time frame and see what's going on here. Draw some vertical lines. Here's a cross right there. Do another one. It's a significant cross. And let's look at that cross. Okay, so here we see a cross right about there. You can draw the Fibonacci like we talked about in the past video. You can maybe catch the pullback and ride it up. That would have been a great move. That signal would have worked. Right here we see this bearish move. Very bearish here on the histogram, diverging greatly, but then it intersects right here and it does this move and it actually keeps going. So if you entered down here somewhere, you would have a very good long position, but that MACD worked as well in this scenario. So let's look over here. Probably looked for a pullback, but it did not pull back. We see that it crossed and it kept becoming very bullish. That's how we use MACD. It's just one of the indicators that really help us understand the trend and the momentum and what could happen. Very important to learn this and apply it to your trading. Make sure to open up TradingView and start practicing using the MACD. Scroll back on charts, add MACD indicator, and just watch how price reacts when the MACD line crosses the signal line. Mark the moments when momentum shifts, when histograms flip from green to red, or when MACD diverges from its price. You'll start to notice patterns. MACD is one of the clearest ways to spot trend confirmations and momentum reversals. And when you combine MACD with the other tools like the moving average, the Fibonacci, the RSI, support resistance, or candlestick patterns, that's when your setups start making real sense. No more of these random trades, just calculated high probability entries. Remember to like the video if you got any value, subscribe and turn on those noties, and I'll see you in the next video.